The following program is for informational and educational purposes only and is not to be considered legal advice. Fraudsters Radio was created to expose the many scams and frauds that have so infected society today. Scammers, fraudsters, and rip-off artists abound, whether it's scamming homeowners with bogus foreclosure relief services, dating fraud, incompetent lawyers, or consumer rip-offs. It's high time the public has a voice. If you work in a profession that deals with fraud, or if you believe you were or are a victim of fraud, you now have a radio listening public that wants to hear from you. Please feel free to message us through our Fraudsters Radio Facebook page, and we may have you on the show as a guest. If you'd like to call in for today's show, the number is 646-668-8512.
And welcome to Fraudsters Radio. I'm Lori Z, nationally syndicated radio host and consumer advocate, along with my co-host, Storm Bradford, litigation consultant and owner of Mortgage Fraud Examiners. Storm, how was your weekend?
Fine, Lori. How about yours?
Pretty good. Mellow, not bad. You know, just kind of enjoying the weather because it's a little cooler down here in Florida.
And how is your new year going?
It's going pretty good so far. You know, I'm keeping busy, and of course, you know, we're always looking for great guests for the show, and we're going to have a good guest on in about 15 minutes because we're going to cover, you know, the mortgage fraud, the debacle, the bubble, the whole thing, and I think you'll find him pretty interesting.
Well, you have to remove that last phrase, so far. When you say so far, the presupposition is something's going to go wrong.
Oh, well, let us hope that, okay, then everything is going to be great this year. It has to be a good year.
So the answer to the question is, how is your new year going? It is going great and will continue to be great.
Very good. I like that. I need to do some visualization along with that, Storm, you know.
Yes, you do.
Yep. And, you know, I want to talk, we've been talking in the first 15 minutes about, you know, things that have happened to us or people that we know. And so, you know, I kind of figured out that between the fake robocalls and the amount of time I spend eliminating scammer and spam emails equates out to about 2 hours a week. So that would be 8 hours a month, right? So it's 80. So that's like almost 100 hours a year that I am deleting scammers, spammers, and, you know, robocalls. I'm putting them into my blacklist. But it's funny, I did get an email from Amazon Prime. Now, interestingly, I am not a member of Amazon Prime, although I purchased on Amazon. And it came up with a click here for your $50, you know, your $50 coupon towards anything on Amazon. And I got an email, and, you know, getting these emails, it's about 100 hours a year to eliminate the spammers and the scammers and the robocalls. That's a tremendous amount of time. And I don't know about you, but I find it frustrating that the phone companies don't do anything about the robocallers spoofing the phone numbers. That's frustrating. And I have a spam filter set up, and it catches a lot of it, but not all. And so what I'm finding is that, you know, the bad guys are becoming sneakier and sneakier, you know, counting on people to click on this. And then, of course, the computer's hacked, and it's just a downfall from there.
Well, the reason why there's so many scammers is because the amount of money that they make. I was just reading an article over the weekend about these companies that call up where, you know, for very small amount of money, we'll create this website for you, and you can make $8,000 a month doing this and doing that. And that alone, the article that I was reading, that there was it said that the sheer scale and the reach of the Internet as a platform has reinvigorated interest, as has the growth in independent contractors working in the new gig community. U.S. e-commerce sales hit $360 billion in 2016 and are expected to nearly double to $638 billion by 2021. So, you know, it's because of the amount of money being spent on the internet, you have these scammers that are just basically taking advantage of that, and they're telling you, hey, look, based on these figures, we can create this website for you. It's very inexpensive. You know, you can make $8,000 to $10,000 a month, and they're just total scams. And in this article that I was reading, there was one lady. She spent one woman, ironically, a 72-year-old former Medicaid fraud investigator, spent $35,000 on various web design services, yet got nothing for them. The largest dollar loss was $67,000 sent by a 75-year-old disabled veteran from Plymouth, Michigan. I mean, it's terrible what they're doing.
Well, it is, and you know, I find it odd because it's you know, if you have criminals that are able to hack into computers or hack into phones, hack, you know, that's what they do. But you would think that there would be some way to protect your computer from the hacking, but there really doesn't seem to be, because these guys are more advanced than the people putting the actual programs together. So I find it very frustrating.
I don't know if it's that so much, Laurie. I think it's the old adage that we all need to pay attention to, and we don't as a rule, is if it sounds too good to be true, it most likely is. And
right.
we're getting scammed because we're allowing ourselves to be scammed, and we're not thinking things out. I know, like in what you do for a living, the credit consulting that you do. There are thousands of companies out there that will tell you, oh, pay us and we'll clean up your credit report for you. So it's a joke. It's a lie, but people buy into it and they believe it.
Well, that's the same thing for you, though. They buy into, you know, the forensic exams, for example, you know, and the chain of title and all that stuff, and they spend all the money. And, you know, you can do a lot of research online if you're willing to spend the time to do the research and read. But I think in both of our cases, you know, people get excited about the other people, you know, the competitors, because they're saying, oh, well, look, this competitor is saying I'm going to win my house on a securitization audit, or in my case, hey, you know, I can go to a credit repair company and they're claiming they're going to get my scores to 830 days. And I just sit here and laugh, and it doesn't always matter how much you or I explain to people, because we take the time to try to make them see, you know, who are you going to? Because have you checked them out? Do you know anything about the company? What questions you're asking? And I think you and I are both researchers in that we tend to look things up and try to check people out, you know, and work from that. But most people just go with the flow. They go with the group, and that's how they lose a lot of money.
Well, you know, it's everybody's looking for the easy way out. It's like these people that write diet books, and they got all these concoctions for diet and stuff like that. You want to lose weight? Push your fat ass away from the dinner table. You know,
you got to eat less food and exercise more. I know.
It's not. Nothing else is going to work. I mean, that's the problem. And you know, the thing that really gets me is I forgot what show it was, or I saw something, and it was like this person weighed like 750 pounds, and they couldn't get out of bed. They had to bring the fire department in. They took a wall out to get this guy to the hospital.
Yeah.
And I'm thinking to myself afterwards, if this guy can't get out of bed, who's feeding his fat ass?
I don't know, but people have to realize certain things.
Somebody is contributing to his delinquency, if you will. And you know, I'm old school. I'm still wearing bell bottoms. You know, you got everybody, got all these people now wearing skinny jeans. Well, I'm old school. If I had somebody that weighed, first of all, they wouldn't get to be that fat. And if somebody brought me somebody that fat, I'd say, look, I tell you what, I'm gonna feed you the next time you can get your fat ass out of that bed.
Yeah, I know.
Well, you're not getting fat. I mean, you got to.
In some cases, though, in some cases it is medical issues, you know, and not all just eating. There, you know, there are other exceptions to that. You know, but then you consider when you see those commercials on TV where they remove the fat from your body, and that's great. But what happens as soon as you go back to your old habits? It's the same thing in credit. If I didn't teach it, people would go back to their old habits and they would make the same mistakes and end up in the same place.
But I mean, somebody might be overweight because they have an underactive thyroid or something like that. But your underactive thyroid's not going to make you weigh 800 pounds.
Right.
Well, I mean, and that's the other thing that we do too, Laurie, that I think is a problem, is everybody wants to make problems a disease.
Yeah.
I was reading something the other day that smoking cigarettes is a disease. No, it's not. Throw your damn cigarettes out.
I get it.
Alcoholism is a disease. Stop drinking.
Yes. Right, but it's harder than you think if you are addicted to someone. But what I want to do, Storm, is this. I want to do a commercial break now because I know our guest is actually on hold on the line, and when we come back, we'll have our guest on. So stay with us. We will be right back.
Have you received a notice of foreclosure on your property? Do you suspect that you're involved in an unfair or fraudulent loan agreement? Are you looking for a way to save your home? Would you like to cut through all the misinformation and find out what really works? Would you like to learn strategies that the so-called gurus aren't aware of? If you answered yes to any of those questions, a professional team at Mortgage Fraud Examiners can assist you and your attorney with all of these things and more. Contract breaches, errors, statutory regulatory violations, fraudulent appraisals, and other fraudulent conduct cause most mortgages to be legally problematic. In fact, the Federal Deposit Insurance Corporation found that nearly 2,000 financial institutions they assessed received citations for significant compliance violations. They also examined appraisals and found out that of the 259 appraisals reviewed for accuracy, only 7 fully complied with professional standards. Call us at 844-920-7200. That's 844-920-7200. Mortgage Fraud Examiners, 844-920-7200.
Okay, we're back on AM/FM 24/7 radio. The call-in number is 646-668-8512, and I wanted to bring on our special guest, Aaron Clarey. And I don't know, Aaron, if you've been listening to the show so far, but based on your website, Asshole Consulting, you sound like a guy that tells people the way it is too.
Yes. Yeah, I don't have time for anything else. Life is too short to sit there and lie to people.
Yep. And I want to do Yeah, Aaron writes great. We've met. I met both of you in person, and Aaron, of course, he writes these books with crazy names, but they're all actually true, and they're all very, very good advice. And Aaron, just so you know, you did inspire me. I'm actually working on my credit book now. It took a couple of years, but I'm pulling it together, and I'm going to say it like it is. That's what I like about you. You say it like it is. I saw one of your videos earlier today on YouTube. Where someone had asked about becoming a bank credit analyst, and you had a good answer, but you always do it with a sense of humor and a sense of truthfulness. And the reason I wanted to have you on the show because Storm Bradford owns Mortgage Fraud Examiners. It's a one-of-a-kind company. Like us, he's straight to the truth. He tells people, no BS. This is how it is. I'm a credit person. I do the same thing. And yet we actually get less customers because most people want to believe what everybody else believes and go with the crowd in the wrong direction. And so, maybe tell us a little bit about yourself, and then we'll kind of jump into it.
Well, basically, I used to work in banking for about 15 years, and then on the side with social media and blogs and podcasts and things like that, kind of dabbled in that. And then the books that I wrote related to finance and everything were kind of self-help in nature, personal financial management. And so I get a lot of questions, from fans and readers. And I end up getting such a volume of questions about their specific personal financial situation that I was like, look, guys, I can't answer these questions anymore for free. And I thought maybe if I charged them, that'd be a polite way to make them go away. And they ended up paying. And so I kind of capitalized on that by forming a company called Asshole Consulting. And kind of the rest is history. So it's kind of a weird Dear Abby, but with lots of cursing and anger and me yelling at the internet where I'll take, or I guess more like it'd be like an angry Dave Ramsey where he takes his calls in on his show. I kind of do the same, but I yell and I curse and I swear because people are dumb and they make dumb choices. And if I'm allowed to be direct and blunt with people and be, quote, an asshole, we can more directly address people's problems and give them the solution rather than beat around the bush or kind of hint or suggest, that maybe someday they'll open their eyes and figure it out. No, it doesn't happen that way. You got to be loud, mean, and it's got to hurt. And so I've had much more success in getting people to turn around their finances that way than, putting the kids' gloves on.
Yeah. And maybe Storm and I need to be like that and say, be a little more aggressive in saying what we say the way that you say it, because you basically are trying to save people time and yourself time and get right to the point. There's no dance around the different points. It's, you get right to the point. And so I was hoping you could talk yep.
And
it's a lot cheaper that way.
Yeah. And Laura,
right.
You know me, I'm just like Aaron. I
exactly.
cuss, I raise hell, and you know what? I have people that say to me, "Oh, I wish you would not curse so much," and I tell them flat out, "Look, I'm not here to breastfeed adults. If you want my help, I'm more than happy to help you my way, not your way. If you don't like it, hang up. Goodbye." There's plenty of scammers out there who'd be more than happy to take your money.
And that's why I wanted, to have both of do the show and have both of you on, because you're very much alike in that respect. You do, at least when we talk on the phone, but you do get right to the point, and you're dealing with people who just don't want to accept the truth. And even for me, Storm, sometimes I just don't want to accept the truth. I want to think there's some other way out, there's some other way to do it. Aaron, anything Storm has ever told me, it's like he's always right. And so, I kind of get that with what you're doing. But what I want to do here is talk a little bit about, when you worked as a bank credit analyst before the bubble, because I recall when we met in person, I think you said you saw what was coming and you got out. So can you talk about that?
Well, basically, I was what they call a credit analyst, and you got bankers. They're basically the salesmen. They go out and they try and drum up business and get loans for the bank. And then what you have is some staff on hand that will crunch the numbers, look at the financial statements, things like that. So that frees up the bankers to go to meetings and lunches and all that other stuff to go drum up more business. And so to the build-up, starting as early as 2003, 2004, we just get these horrible applicants. Like, they got horrible credit scores. They want to do these deals. And whether it was real estate development or whether they were tendering property as collateral for some other commercial venture because it wouldn't be related to real estate development, someone wants to buy a bar or something like that. Anytime I was looking at the housing valuations, the cash flow, and all this other stuff, I'm like, these housing prices are not what they say they're worth. And then you throw in that almost 60% of the banks I worked at, 60% of their volume was real estate development and housing and real estate. I started seeing some major risks, major overvaluations. I'm like, whoa, guys, something's wrong here. There's no way mathematically these people can pay it back. And worse, if we got to liquidate this stuff, you're not going to get what the bank said it was worth or what the appraiser said it was worth. There's a bubble going on here. And not to bore you with the compensation packages of bankers are paid based off of how many loans they do, not whether the loans are paid back. And so I got a bunch of these middle-aged, gray-haired bankers' panties in a bundle because I was the guy stopping them from equally going and borrowing more money than they could afford to get their boats and get their McMansions and get their lease beamers and all that other stuff. So what ended up happening, and I saw it, where these bankers had no incentive whatsoever to do due diligence, to accurately analyze these loans, to make sure that these loans were creditworthy, in part because it got in the way of commission and their compensation, but then also because, for the most part, banks didn't hold on to the loans. They would simply sell them on the secondary market and liquidate them, turning most banks into brokerages So they were brokers. They didn't care. They just got their commission. It was really just a commission, an elaborate, a complex commission-based business. So that was one of the many things that led up to the housing bubble. And so I was there on the ground floor seeing it happen, so much to the point I wrote a book called Behind the Housing Crash that I published before. I mean, it was being written way before it happened, and the day it got published was the day Lehman Brothers went bankrupt. So it was very predictable, very, very obvious to anyone who wanted to listen. But as per what you guys were talking about before, people don't want bad news. They don't want to listen to the real world. They want to be lied to. They want pie in the sky. They want unicorns, and they want Anne Margaret in circa 1967. But it was a very interesting experience in human psychology of just how much people want to be lied to. So that was my experience for being a banking analyst back in the housing bubble days.
Now, Aaron, was your bank a federal bank, or federal savings bank, or what kind of bank was it, or was it just somebody?
All of the above. I worked at a credit union, a QSO, which is kind of like a cartel of credit unions. I worked at small community banks. I worked at large federal savings. So it ran the gambit. Everything from your small little credit union to quasi regional interstate banks that would had national operations.
And Aaron, that's what we told our clients. One of the things that we do is we analyze the mortgage transaction. That's what we do for a living, not these scam forensic loan audits or securitization audits. We actually analyze the transaction, the appraisal, and everything. And we found on a national basis that these homes were overappraised about 80% of the time. And that's what caused the economy to come down. It wasn't the economy that brought the housing market down. It was the housing market that brought the economy down. And people don't understand that. I mean, I'll give you a prime example. I saw a piece of property my wife and I looked at on the Eastern Shore in 2001. And it was a place on the water, 3-bedroom, 2.5 bath, weekend place, and they wanted $175,000 for it. In 2006, it was back on the market, and they wanted $575 for it. And I said to my wife, "What do you think made that house go up $400,000 in 5 years?" I said, "It was these guys were playing with the appraisals. And what's going to happen is it's eventually all going to come crashing down, and when it does, it's going to bring the economy with it." And you're absolutely correct. That's exactly what happened.
Yeah, and some of that is happening a little bit today. Also, let's not forget, people are like, well, housing appraisals is certainly one thing, but when you have artificially low mortgage interest rates, that was another thing driving it up, where you say, hey, wait a minute, if interest rates go up to like 5, 6, 7%, 75% of these people would no longer be able to afford these mortgages. And thankfully today, there's nowhere near the amount of ARM, adjustable interest rate loans that were being made back in 2004 and 2005. But the interest rate sensitivity that the housing market has is also something that was not discussed or even considered back then. But once again, it was the appraisers. It's the same thing. They're paid per appraisal. They don't give a darn whether the mortgage is paid back or not. It really was just a mass-produced assembly line to bang out these mortgages, get them out there, and prospects of being paid back be damned. It's like, let's get our money and go.
Well, that was the problem, Aaron, is from our perspective, is what would happen. First of all, you had brokers that were going to somebody and the banks as well, to people on their, quote, approved appraiser lists. Well, that's illegal now. You can't do that anymore. But back in that decade, they go to somebody on their approved appraiser list and say, hey, Joe, I need for you to come back $400,000 on this property. The appraiser would come back and say it's not worth $400,000, it's only worth $3,000. And the broker would say, need I remind you that you're on our approved appraiser list and you won't be any longer unless you give me the $300,000. Well, the appraiser said, well, nobody's going to catch on to this. I'm just going to go ahead and say it's worth $300,000. Well, regrettably, the person that bought that house was already $100,000 underwater. That was the problem.
Yep. And then what was really interesting is after a year of bogus appraisals, you started using comps that had a year-long track record. So you'd go and you'd look and see what did the comparables sell for, and these were inflated comparables. So even if you did it right that time, the data you were putting into your appraisal algorithm or formula was garbage. So you had garbage in, garbage out. So it became the self-perpetuating thing. So I remember developments where 3 or 4 would sell at inflated prices, they get the appraisal or the appraisal for. They would actually sell based on lower interest rates, artificially lower interest rates, and then anybody else coming in there would be a sucker saying, "Oh yeah, see, these all sold for $400,000, so that house is worth $425." And
right.
Yeah, it was just insane. It was just insane. Thankfully today, the feds did crack down a lot in terms of development, appraisal ethics, and things like that. That has put a kind of a lid on the next bubble going. But even today, I'm looking at some of the nominal figures. We have like a little bit of a bubble here, nowhere near as bad as 2006, 2007. But they're still getting away with a little bit of hanky-panky. I have not been in banking in years, thankfully. But just looking at some of the numbers now, again, it's kind of like, yeah, it's getting a little bit bubbly. But what you really see with these inflated prices is human psychology, where they want to believe. They want to believe that these prices are legitimate. They want to believe the lies. But inevitably crashes come and send people back down to crippling levels of despair and recession and depression. And I wonder if people ever learn from their mistakes the first time around.
And Aaron, I don't know if it's so much that people want to believe. I think what they want to believe is that the person that gave them the number was legit. I think that's what they really want to believe, because if somebody's an appraiser and he appraises this property, he's the expert. He must know what he's talking about. I don't know what I'm talking about, so I'm going to take what he says, and unbeknownst to them, the guy was artificially inflating the property.
Right. Or it didn't even know what they were doing. The number of appraisals I've gone over, we used to do things called banker estimates, where a property appraisal wasn't fully necessary, the loan to value wasn't high enough or whatever. So some were, just kind of a drive-by, and I know how to appraise properties, and maybe not the exact same way appraisers do, but you do price to rents, per square foot, comparable sales, blah blah blah. So it's not rocket science. And there'd be times I'd be going in, and I do the banker's estimates, and it would be a full 30, sometimes even 40% the value. I'm like, what is wrong? Did I do something wrong here? I'd go over my math. I'd go over my statistics. I'm like, no, I'm not wrong. And then you look at the appraisal, like, this is the assumptions and the methodologies were completely bogus or pie in the sky. And then when you tell people no, oh my gosh, then the knives come out, and you're a bad employee, and you don't know, you're not a team player, and you're ruining people's dreams. And it's like, no, I'm trying to prevent you from having a nightmare right here. But it was great to see the Great Recession happen, not from an employment perspective, but it was great to see all my bosses got fired, all these banks either went belly up or got bailed out. People who bought more housing than they could afford ended up losing their houses. And I know it sounds vindictive and cold, but it was hilarious. It's good to see bad people suffer and be able to say, I told you so. But now people are, once again, kind of believing the pie in the sky. But it'll happen. The opportunity to say I told you so will happen again.
Yep. And guys, and Aaron, I want you to stay with us. We're going to do a quick commercial break. We'll be back in just a moment.
There is a very high likelihood your mortgage contains an extensive error. At Mortgage Fraud Examiners, we know just how costly a missed opportunity can be. For almost 40 years, we have consulted, retained, and referred to by attorneys, lawyers, trial practitioners throughout the nation. Put another way, we are the trusted source for litigation support. A foreclosure is basically an allegation the homeowner breached the contract by failing to make timely payments. The contract is clear. The borrower promised they would make timely payments, and if they didn't, the lender could take the property. The only way to overcome the homeowner's breach is to show the lender breached first, identify errors that would void the contract, identify regulatory violations, identify appraisal fraud and other fraudulent contact. And the only way to find these wrongs is to thoroughly examine the whole mortgage transaction. This meticulous examination of your mortgage transaction and appraisal can identify legal defects that would make your mortgage unenforceable and entitle you to compensation or even free title to your property. Call us at 844-920-7200. Mortgage Fraud Examiners, that's 844-920-7200. 844-920-7200.
Okay, we're back on AM, FM, 24/7 AM radio. The call-in number is area code 646-668-8512 with our special guest, Aaron Clarey from Asshole Consulting. Laurie, I know you got a bunch of questions. Go for it.
Oh, of course. I always do. I'm curious what actually happened. You know, you mentioned in the last segment how, you know, the bosses, they all got fired and things are happening. Did you end up leaving yourself because they were trying to get you to you know, sign off on these loans, and you were like, no way, I'm not going to do that?
No, it wasn't that. It was more rock and a hard place, where if you have a business model that is brokerage in nature, you're just turning it over and you're only doing it for volume, you don't care about quality, then the role of a credit analyst is pointless. So what they would do is by due diligence, they say, okay, we need someone to analyze these figures. So I'd go analyze them, I'd run the numbers. And it's not like I have an opinion. It's like, here's the formula we're using. The formulas are pretty set in stone when it comes to underwriting. And so then the numbers would pop up. It was robotic, and nowadays you have software that does it. You don't even need a human to do it. And so I would give them these numbers that were not debatable, and then they'd yell at me. I'd get, oh, you're not a team player. You don't understand. You did this wrong. You did that wrong. It's like, no, this isn't an opinion. This isn't an English paper. This is a math test, and here are the real numbers. And so then what they would do is anything in the gray area to make it so the numbers would work. A lot of that would come in the appraisals because there's a little room for tomfoolery. But then they'd also say, well, look, this guy's tax returns, he does that to lower his taxes. His real money is like this, so why don't you throw it in there? It's like, no, we're not going to do it. So it was just ramming heads with management. Inevitably, I quit. And I had the most epic telling the boss off of telling the boss offs ever told. And thankfully, that guy's dead. He died of a heart attack. It was awesome. But that's basically where I was like, I can't do this anymore. It wasn't like because I was not going to do anything unethical. It's I cannot mathematically do what you are asking. You are asking for the impossible. So what would end up happening, I think, right before I quit for good, there was this one banker just right in my ass telling me I got to work better and I got to understand the client. I'm like, those tax returns not only show them with losses, but they're fraudulent. I've never seen so many mistakes. Sure enough, sheepishly, the banker comes in and says, I want you to stop working on whatever the Jones account, whatever it was. I say, oh, really? Why is that? He's like, the FBI is investigating the rating his files. And you just knew, like, that was the sign that these guys are all scumbags. I mean, I know bankers have this negative reputation, like lawyers, and then you always ask, like, oh, are they really that bad? Yeah, they are that bad. I mean, they really should be dragged out in the street and shot, in my opinion. Unfortunately, we have rules and laws, but they are that bad. These are scum. These are pieces of garbage. They are the main reason, not the only reason, but they are the main reason. I don't even say greed, it's laziness. These are guys who didn't want to put the effort into becoming engineers, but wanted to make the same money. And so they broaded their way, and they're salesmen and business and networking. And thankfully, there's been a great purge of that. But that's why I quit, is it wasn't necessarily morals. It was like, I cannot do this job because it's impossible. I'm sick and tired of these old gray hairs yelling at me for the reason that 1 + 1 = 2 when they want it to equal 7.
Well, Aaron, good for you. You got out.
Yeah, Aaron, let me ask you a question. I'm somewhat confused. What is the difference between a credit analyst and an underwriter?
None. It's just name. An underwriter is typically more used for insurance companies, whether you underwrite the loan or you underwrite the policy. which means you just analyze and look at the creditworthiness of the person who wants the policy to borrow the money. And a credit analyst is the same thing, although that word is typically used for banking, but the two words are interchangeable.
But I do know that in banks, and I'm very familiar with how banks work. Matter of fact, I was with the group that started the bank. We didn't have credit analysts. Well, at the time, we didn't do mortgages. I'm talking 37 years ago when we started this bank. We didn't do mortgages. It was just regular banking stuff. But as time went by, I know in the underwriting departments of banks, they have appraisers that are supposed to look at the appraisals that come in, and obviously because they had so many loans coming in, they weren't really looking at them, and that's why these things got passed over. But, you know, somebody in the underwriting department, and you know, they have to follow certain statutory guidelines. They have computer modules in there that shows how to do that and so forth and so on. So, I mean, we see a lot of problems from banks, but it wasn't a matter of fraud. It was more a matter of negligence, where they just weren't looking close enough at the documents. You know, they weren't purposely committing fraud. They were just negligent in what they're doing, i.e., they weren't looking at the appraisals as they were coming in the door and making sure that they were done properly. So that's why I asked the question, because I know in banks now they have people who are credit analysts, and they have people in underwriting departments in their mortgage divisions. That's why I was asking what the difference was, because you weren't actually underwriting loans. You were just looking at numbers, right?
Right, yeah. I mean, you can go split the hairs as if for a mortgage and whatnot, but where it kind of blurred over is we inevitably have to issue mortgages because people would offer their property, their house or whatever as collateral, particularly for small business lending. So it was a rare instance where your collateral that was used to secure the loan wasn't somebody's house or the factory building or something like that. So inevitably we would be writing mortgages to secure those loans.
Yeah, because we used to tell people in the banking business that you don't loan money to people that don't have money. So it was always, we used to tell our people who were out there doing the loans that you need to find out how they're going to pay the money back, and if that fails, how are they going to pay the money back? But as time went on and they got rid of the laws that had been Glass-Steagall and those types of things, and they started coming out with all these exotic loans, thanks to President Clinton, that, they started, basically looking the other way. I know that Clinton, he brought in the heads of the major banks and basically told them, look, if a minority comes in your bank, we want you to look the other way. I mean, that actually happened. So he was the guy who basically was the one who started all this, got rid of Glass-Steagall, got all the regulations changed where you could start doing these exotic loans and basically not have to back it up at all, because they were selling them, as you said, on the secondary market. They weren't holding them in the house. They didn't care. So, that's the problem as we saw it and still see it today.
Yeah, right. As I Storm, you should tell them about the note examiners business that you have.
Oh, yeah. We started because we had so many lawyers and homeowners coming in to us examining their mortgage transactions, looking for appraisal fraud, broker fraud, title company fraud, negligence, failure to meet statutory regulatory mandates and things like that. We started having pension funds now and other buyers and investors who buy these notes from the major players. Like last year alone, Fannie Mae and Freddie Mac own 98% of all non-jumbo loans in the United States. And last year, they sold $18 billion with a B in non-performing notes. And these pension funds and hedge funds buy them anywhere from 10 to 40 cents on the dollar. And so they now come to us just to look at the notes to see if, in fact, these notes are any good. But it was a conglomeration of people that basically screwed this up. You had the rating agencies that were rating things A+ when it was D paper. There was just a lot of people who were involved because there was too much money involved. But as a rule, it was our findings, and has always been our findings, that, and matter of fact, the government found that the banks didn't commit any fraud. They were negligent. They were breaching their own contracts. They weren't following statutory and regulatory mandates, but they found that there was no evidence of any fraud itself where they were actually trying to screw people. They were just negligent. Like you, for example. Right. You're telling them, hey, look, here's what my numbers are. Sorry, Aaron, that's not our numbers. Shut up and go sit down. So,
I cannot emphasize how dumb bankers are. These are not smart people. They really are that dumb. And I remember, and another thing, not to bore your listeners with kind of a detail, but depending on how your bank is structured, what I typically ran into was loan committee. And you'd all vote on the loan, and I would always be outvoted or my numbers would be ignored. So if you have a bank where the lending is structured based on loan committee, where a group of bankers put together, they all listen to the loan, and then they vote. So you could have all the horrible numbers in the world saying this is, red sirens are going off, please don't make this loan, and then 5 out of 7 would vote to make the loan. So that's another thing where, you have truly low IQ morons with suits voting for it because it sounds like a good deal. That's Jim or that's Bob. Oh, and I always trusted Bob.
That's exactly how it worked. I mean, we had these meetings every Monday morning where we got all the loan officers in. Okay, sit down. Let's look at this loan. Let's look at the package here. What do we got here? What do we got here? And then everybody would vote. We'd give them the loan or we wouldn't give them the loan. I mean, if somebody was looking to build igloos in Miami, you're not going to get the loan. But if it looked like it's a viable transaction or something like that, they'd get the loan. But sometimes you're right, sometimes you're wrong. But because they wanted to get these, they had so many of these loans coming in. I mean, tens of thousands of loans coming in a month that they just couldn't handle the work. And that was the problem. And again, you're sitting there and, you understand what your job is. You want to do your job. You want to be helpful. And they're like, come on, Aaron, you got paralysis by analysis. We need to get these loans out the door, and that's what they're doing.
Yep. Well, and then it switches the business model to, like, again, if you're not holding on to the loan, what do you care? And that it almost became moot. It's like, well, okay, if we're not going to hold on to the loan, why are we even? Let's turn this into a mortgage broker operation. We don't need lending committee. We don't need credit analysis. As long as it's a conforming loan, you can ship it out on the secondary market, and we're done here. And so that's exactly where you kind of realized your position, and then you realize, how dumb are you guys? If you're not going to hold it, why am I here? Why did you create this position that is completely unnecessary? So, the stupid is unimaginable, but it was that stupid, yes.
But the reason why...
Wait, Storm. I'm going to ask you to hold the thought. Let's do a quick commercial break so we can do the last segment.
To tell Aaron that the reason why you were a very important, viable person in banking originally, but then when banks started getting into the mortgage business and they were selling them on the secondary market and they needed to get these loans in the door and out the door, you were no longer needed.
Correct.
That was the problem.
Yeah. Yep. All right. Let's do a break, and I wanted to. I got some questions for him too. So let's do a commercial break. Aaron, stay with us. We got one more segment to go, and we'll be right back.
Consumers, do you have bad credit? Can't purchase a house or car? Paying too much in interest on your credit cards and loans? Scammed by credit repair companies? There is hope. you can get back on track and do it the right way. Call Credit Education Consultants today at 813-500-6064. That's 813-500-6064. Or go to crediteducationconsultants.com now and get the help you need. Don't delay. Call today. Mortgage reps and realtor inquiries are also welcomed.
Okay, we're back on AM/FM 24/7 radio. Call-in number 646-668-8512. We have our special guest, Aaron Clarey from Asshole Consulting. Laurie, go get him.
Yeah, go get it. Well, you were talking about maybe being back in a little bubble now, but what concerns me, because obviously mortgage people send me their clients, is I see that some mortgage people, I thought 620 or 640, not great to get a loan at, and some will do it at 580. But I see now some will write loans with a 500 mid score, and I think to myself, do the people who have a 500 mid score that want to buy a house actually know what that means to them? They just think they're buying a house. I think they have no idea how a loan even amortizes and how much interest that they're paying, and I'm just curious for your opinion on that.
No, I mean, if you thought bankers were stupid, then there's people with credit scores that are 500. And I remember we approved a loan for, I didn't know credit scores could go into the 300s. It was 393.
Yep.
One of my, and no, they don't. And you could see this tangentially or on a side note with student loans. Now, these kids go to college, and they do not know how compounded interest works. They don't know how exponential math works. And they will sign up for $100,000 in student loans, $200,000 or whatever. And so if you have a credit score of 500, you're already bad with money. And I do not think for a second you understand what amortization is, what compound interest is, and what exponential growth is. And so when you started seeing these, the ninja loans or the no assets, no income loans or the no doc loans or low doc loans, once that starts creeping in, yep, that's a sign that we're going to be in a bubble again, because these people, just as you can trust them not to pay back their credit card, that's why they have a 500 credit score, you can doubly ensure that they're not going to pay back their mortgage.
Right. And Storm, I know you're going to jump in on this because he's talking about student loans, which, are really the next default after the housing bubble.
Part of the problem, too, is, you had the government was involved. And, again, this was Clinton doing this nonsense. I mean, when you have the FHA and you could have a credit score at 500 and get a loan, you still can. So, and I agree with Aaron. I mean, people have to take some responsibility for their own actions. Look, you can't. If you got a credit score of 500, you're not paying your debts in the first place. And why the hell now are you taking on a mortgage if you can't make your payments as is? Now you're taking up, more debt. You're exacerbating the problem, and you're going to end up getting foreclosed on. I mean, it's ridiculous. But again, it's like people who are on welfare. If you're going to give me money, I'm going to take it. If you're going to loan me money to buy a house when I'm not paying my bills as it is, I'm going to take it. And at the end of the day, they're going to end up getting booted out. But, it's a lot of the government's fault, doing the same thing, that guaranteeing loans made by banks with credit ratings in the 500s.
Right, and Aaron, you talk in one of your books about getting a fluffy bunny degree in relation to the student loans. Do you want to explain what that means?
Well, I mean, there's worthless degrees, anything that's the liberal arts or humanities. I'm not saying that philosophy or literature doesn't have any value, but these degrees have no value in terms of employability, and you have kids signing away on their student loans to pay back $100,000 or $75,000 on a degree that has no value. In some regards, it's even worse than an overpriced house, because at least a house you can live in and have some residual value. But what I think it shows is, especially, again, these are college-educated people. These are the smart ones. These people really don't, not only do they not understand interest and compound math, I don't think a lot of them even understand the concept of debt. they think this money just comes from the government or mom and dad and they don't have to pay it back. They really have that mentality. So now when these people are dumped into the housing market, if they ever do get to the point of wanting to buy a house, you have people that are so financially illiterate. They're not evil. They're not malicious. They really don't understand that you got to pay back that money. They don't understand what the concept of a loan or debt is. And so you see it where they just blindly go through and not pay things back.
Right, but probably because most people are not taught that. Most people are not taught how to reconcile your checking statements. You know, nowadays you can do it online. It's much easier than before it was online. But they don't really teach anything about credit or money or buying a home or student loans while you're in school. No one actually learns that or teaches them that, and most people don't really seem proactive, I would say, in doing the research to find out what does this mean. They just go along with it because, hey, if everybody else is going for $100,000 student loan at whatever percent, they think that's the norm, and they don't know any better. But, you know, I would think
the problem is, and I really don't even want to get started on this topic, but it's all these leftists, these socialists, these communists that, you know, Bernie Sanders, I'll tax you 90%. You make $100,000 a year, you're only going to get $10, but you'll get to go to school for free, and your medicine will be free. You now have some of these leftists in California, we're going to pay you a salary for doing nothing. So that's the problem. You've got, you know, these people in government who, instead of saying this is a capitalist society, we make money by being someone who is trying to make money, who is trying to better themselves, instead of a society where everything's given to us. That's the biggest problem. And I agree with Aaron. I had a friend of mine who was a professor at Maryland University. He taught a class on what to do when you get a history degree besides teaching, that it was basically worthless. In the real world, a history degree is not going to help you. And some of these other types of degrees, and I agree with Aaron wholeheartedly, you've got these people now, they've got, we had a woman here the other day that we were doing an analysis of her mortgage transaction. She had $100,000 in student loans, but it was 25 student loans.
Oh, my God.
25 different student loans. And it's just a joke. It was easy money. They can go out and get this money, and now all of a sudden they've got it, and they can't pay it back. She's been bankrupt a couple times. She's in bankruptcy again. They're getting ready to foreclose on her house. She's got all of these problems, and they're all based upon her own misbehavior, if you will, being in the government, you know, basically contributing to her delinquency by giving her money when they shouldn't be giving her money. That's the problem. By the way, before we end, I'd like Aaron to talk a little bit about Asshole Consulting, what they do, and, you know, so our listeners can, if they want to call, I guess, is it on any topic, Aaron, or what can people call?
It's any topic. It's any topic except for things I legally can't consult about. Like, I can't give you specific financial advice, like invest in this, invest in that. I can't give you legal advice. I'm not a lawyer. And then if you're like, oh, I'm suicidal and depressed, too bad. I don't give a stink. Go take your meds and go talk to a shrink. But if it's, you know, personal finances and budgeting, what should I major in? I get a lot of dating and relationship questions from young boys and girls because the younger generations is all screwed up. A lot of, kind of lifestyle advice, a lot of stuff on when do I buy a house, should I buy a house, things like that. So anything under the sun, the key thing is, do you want the truth? You know, you want the truth, hire me. You want to be lied to, go listen to Oprah or hire a regular consultant. My goal is to not beat around the bush, to look at your problem, and I'm the only guy, you maybe got that friend that'll tell you like it is. I'm that guy. I'm going to tell you right to your face where you're screwing up. I'm going to tell you directly and bluntly. There's no going to be wishy-washy stuff about it. And then you have your problem identified, and then the solution is very obvious. So, you want to blow $10,000 on therapists and touchy feel good, fine. You want to blow $100 on me in 1 hour, and your problem is identified, and it's up to you to solve it. I think it's much more effective.
Yeah, and quickly, talk about your Captain Capitalism blog.
Well, I got a blog called CaptainCapitalism.blogspot.com. I've had it, for 12, 13, 14 years now. And that's just where I write, the occasional posts. I also put any interesting videos I have from my YouTube channel that is how I do the consulting, kind of like Dave Ramsey, where it's up on YouTube so people can read it or watch it like Dear Abby. So I'll put some interesting videos up there. I also have 2 podcasts where I'll link there. It's basically the main site where I put and link to all my other work. So if you want to tune into a podcast, you want to read an article, you want to see what's going on, go to CaptainCapitalism.blogspot.com, and it's got all the links to all the other stuff that I have going on as well.
Well, excellent, Storm. Any other questions? We got a couple minutes.
No. I think it's a great idea. I don't like the word asshole because it's because I tell people all the time there's no shortage of assholes in the world. Just if you don't believe me, go to the DMV. You'll recognize that in a moment. So as far as assholes are concerned, trust me, there's plenty of them. But I do agree with the fact that, there's not enough jerks in the world, and that's the term I like to use, that somebody that's going to tell you not what you want to hear, but what you need to hear.
And right.
If they don't like it, and the whole concept that you have, I think is terrific, that, hey, tough. I'm going to tell you what you want to hear. If you don't want to hear it, hang up. If you do want to hear it, it's $100, and I'm here to tell you. But I'm not going to comb his hair. I'm not going to baby you. I'm not going to breastfeed adults. I'm going to give you what you need to hear. And the concept I love.
Yeah, I love the term asshole because it cuts right through the chase, and then it gives me license to be that. Because right now everyone's way too soft in this society, and they're lied to. They're lied to so that people either get elected or you don't have to parent or you get high marks as a teacher or professor. People are so lied to right now that the truth and reality is tis. And anyone that dare comes in and points out the emperor has no clothes, they're punished. But if you go in and like, I'm a prick, I'm a mean guy, and people say, oh my gosh, you said such violent things. And I said, did you see the site? Did you see the name of the company? What did you think? Flowers and puppies and Oprah? That's not what we deal with here. And so there is definitely a market for it. Thankfully, there's a lot of people who do seriously want to tackle their problems or be successful or resolve their issues. They're not the majority, but there is a market. And thankfully, people, when they go out, they're going to trust a guy who calls himself an asshole more than they are like, hey, I'm Slicky McSlicky Willerson, and I'm here to help you out and make you rich. Here's my 5-step program. There's people whose hair goes up on the back of the neck when they hear that. But when you have a guy who's like, I'm a jerk. Yeah, they're much more trusting of somebody who calls it like it is.
That's it, and that's what the show is all about, is exposing that and getting right to the truth. And Storm and I, like you, we want people to know the truth. The problem is it's what they need to hear, not what they want to hear, which you said before. I also wanted to mention real quick before we close up, you did a book, I think Bachelor Pad Economics, but if you Google Aaron Clarey's name, AARONCLAREY, you'll see on Amazon you have a lot of books, and they're all well written, and they all have really great titles. And when I first read them, I was like, this must be a joke, except that they're not. You really just get right to the point of whatever your book topic is. You're cutting to the chase, and you're saving people a lot of time. You're saving people from wasting time and money, but they have to decide for themselves, what they're going to do. So it comes down to making the right decision or the wrong decision.
Well, in this last minute, why don't you tell everybody how our listeners can get hold of you, all of your coordinates, your phone numbers, your email, your websites, and everything. Go.
Sure. Okay, assholeconsulting.com is the site for Asshole Consulting. My blog, which has all the links to all the social media, I won't go through it. It's CaptainCapitalism.blogspot.com. I got YouTube and Facebook and this and that. I have 2 podcasts that I do. One is called the Clarey Podcast. The other one is called the Older Brother Podcast, where me and a bunch of angry Gen Xers get together and yell at millennials and give them advice. And then my books, you can find them on Amazon.com. The flagship product is Bachelor Pad Economics, but I got other ones called Curse of the High IQ, Worthless, Enjoy the Decline, and then Black Man's Guide Out of Poverty. We have a rather large minority listening audience. And that's basically it. So if you search me, you'll find me, and standard Twitter and all that, you'll be able to find, no problem.
Excellent. Well, thank you so much for joining us. It was great to have you on again on this show anyway, and I hope maybe you'll join us again in the future. Storm, we're going to sign out here. So thanks to our listening audience today for listening to Fraudsters Radio. You can join us again next Monday from 1 to 2 p.m. Eastern Time live. Remember, we want to hear your stories, and you can contact us through the Fraudsters Radio Facebook page. Thank you, guys.
Okay, guys.
Thanks a lot.
Happy New Year.